Hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at what happened in the market and how we can plan for better trade for the next day. And this is analysis for April 21st, Thursday, 2022. So after a big fall yesterday, we had a consolidation that we are seeing in the market, right? And we have an expiry today. Let's see what's most likely to happen, right? From the chart analysis, our pre-market analysis for tomorrow, April 21st, Thursday, expiry date 2022, would be based on all these parameters that you see on the left side and the right side. Right side, you have data analysis also that would be made on the global commodities, currency market, and volatility, open interest, and all of these, and then we'll have some actionables as well. Right? So let's get into and see what is the candle. So this is a green candle that you see, right? Markets gained. And it's an inside bar, right? So an inside bar is a candle that forms with its high and low within the previous candle, right? The previous candle is clearly a bearish candle, so it completely engulfs. So this new candle completely engulfs. So it could be an indication of some kind of consolidation before the further up move, probably. Right? Never know, but that's what happened in Nifty. Banknifty also, it's an inside bar. If you look at the yesterday's big move candle, it's clearly a very small candle within it, but it's a red and red. Here it's a green and a big red, right? So it's clear inside consolidation is what the candlestick patterns in the short term is indicating. And remember that we had given up the major support zones of gap support and the confluence of moving averages and all that was yesterday, and even the 20 moving average was gone. So it's today's move is not that strong enough to retain all that. Nothing has happened. So normally after big falls there would be some consolidation that will happen before it decides which way to go, right? That's what happened today. Let's see what is Nifty. 1% gained, 178 points, and Nifty flat 0.0, 27 points only loss. It was kind of flat movement that you can see. Nothing much happened with regard to points. It was range bound basically. So it's an inside bar as we told, and we also know that this is a trend line channel breakout that happened after from a flag formation and then fallen back into the channel again. Here Banknifty also, a flag pattern breakout happened. It fallen back now into the trend line channel, same, right? And we also know that there are previous swing lows, lower low, lower high formation that has happened, and same thing with Banknifty, lower high, lower low. So swing high, another swing high was recently made, below the 1850 previous swing low. So so that pattern has to break before we can see any point, and then it will become consolidation and bearishness that will continue. That's what I can see. Remember, so this is where the moving average confluences were there, which is a major support, and it is breached yesterday, and now it's trying to climb back, right? But it's still below. It's not done anything much difference in the Banknifty, right? So intraday, if you look, this is the price action. 15-minute charts. If you see, it's a gap up and then a consolidation within a 100-point range on the Nifty. And the Banknifty, if you see, it is kind of clearly range bound. It ended up with being a flat where it opened. It ended up there, hardly 27 points down. So that consolidation was in the 300 points range. Nifty consolidation was in the 100 points. So that's the price action for today. Remember, we had a gap down and a big breakdown that happened yesterday, and Nifty has managed to not go below the previous day's low, and retaining close above 70. That's very important, right? Now that's intraday price action that we have seen. Now Bollinger Bands, let's see what is it, right? There is a skews to of the Bollinger Band that is there. That means volatility was not as it used to be a few months back. Same with Banknifty, skews happen, but clear consolidation can be seen because both the bands are contracted and then moving sideways. It's flat and it's rising up or down, right? So that's consolidation that's clearly evident on both indices, right? But the width is not that small. The distance from the bands and the median is still high enough to be having good volatility, and that is what we see V-shaped moves. And the fact that we have fallen down the median indication there is a bearish bias also that Bollinger Bands are indicating, right? So that's about it. Let's move on and see what's the support resistance is. Here, major resistance ahead will be 17,200, 17,300. Above that, you have 17,350, 17,400, and 17,500, 17,600, which is Fibonacci 23, and above that 17,800, 850 levels. Downside, the supports will be 17,000 is the major, 17,050, which is breached yesterday, but managed to recover above that. So that if that is gone, then is 16,800, 16,900, Fibonacci 38 will be support on the Nifty, and below that is 16,700, 16,750, then 16,550, 50, then below that 16,450 level, which is the Fibonacci 50 retracement level. Right side Bank Nifty. For some reasons, I'm not able to see the Bank Nifty picture clearly, so I'm going into the charts directly and then see that. What you see here is some kind of markings are there, so that stops me from seeing that as well. But let me go in once again and show you the levels. So the current support zone is at 36,800 Fibonacci 38 retracement levels. Below that, if that is breached, then you have 36,600, 36,000 nearby levels. That's where the support is, and below that you have 35,000 kind of levels, which is the Fibonacci 50 retracement levels. This is Bank Nifty, remember that. And downside, if that is also breached, then you have 34,350, 34,750 kind of levels. Similarly, on the upside, this box is irrelevant because the gap is breached and then it's no longer relevant. But the resistance upside immediate would be 37,000 level, and then above that 37,500, which is Fibonacci 23, and above that you have 37,800 levels, and then above that you have 38,000 levels, and above that 38,500, which is very crucial to close that to get into a bullish runs at all. So the place to watch is 38,500 and then 39,400. Downside 34,000 with major support zone, right? Because we have a gap support also here, right? Another gap, which is active, which is not filled yet, but this gap is relevant. So let's get back to the slides and continue. Momentum, yes, this is very good. Now Bank Nifty, what you see here is the RSI 40 level support is taken, and then the price momentum has bounced up from there, which is good. So that is having the support zone bounce is good. It shows some bullishness at least, right? But otherwise momentum is sideways, and Bank Nifty also it continued to be sideways and dipping. There is no bounce up in the Bank Nifty today, but Bank Nifty is remain sideways in the medium term as well. That's weekly charts also show the same. No divergence seen as of now. Trend indications, if you see, it's bearishness in the weekly and the daily on both indices, Nifty and Bank Nifty, right? So the bearishness has got rising strength that is seen today on the Nifty, but overall DMI negative is falling. Actually, you can see that, but it's bearishness. That the trend continues there. That's evident from both the charts. With weak strength overall, you can say not very heavy bearish or that is not there, right? Volatility, if you look at the India VIX, has cooled off further 5.5%. Remember, it had shot up very close to the trend yesterday, and now today we have a cool off to settling it at 18.67 levels, and 18.54 is looking blind volatility in the Nifty, and blind volatility percentage is 74.54, which is cool. It's also very cool off. Remember that 18.67 is very close to 20, so anything about 20 can be very, 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 very volatile. Right? Even 19 had a very good volatility yesterday when it made the zigzag moves throughout the day. Right, so you have to be cautious when you're doing intraday trades. Of interest, tomorrow is an expiry day weekly, and here you have the open interest, the most relevant way. So what you see here is there is some unwinding that has happened on the call sides. You can see that on the downside calls are and the puts are going to add up, right? Otherwise, overall, if you see, it's dominating. Highest number of contracts are that of call writing. So that means it's slightly bearishness is still there. Bank Nifty also, you can see some unwinding of the puts has happened, right? No unwinding of calls has happened. So let's look at the range, 17,000 to 17,500. It's a range, right? Highest put writing and highest call writing is at 17,000. So much better than yesterday's. So that's 500 points. It's a narrow range that the put and call writers are seeing for tomorrow. And 16,500 and 17,200 is the highest, second highest put and call writing that you can see. So that's why the support and resistance is seen. and 36,000 and 38,000. So Banknifty, people see, the writers seeing that more risk of it's up 2,000 point range is given there between the highest put and highest calls. And 34,500 and 37,000 is the second level of highest put and call writing support and resistance levels are seen, right? That's Banknifty. Put call ratio, look at that, it is not much improved. It's closer to the bearishness actually, 0.59, 0.58. And interestingly, the futures are built up for today showing that it's a short covering. Short covering is basically when the people who have gone short is covering that and then going long. So there's a panic buying that will happen. The positions will be reversed and then people suddenly change their views, and that can continue for tomorrow as well. And so some up move can be expected for tomorrow is what the open interest is showing. Yeah, so it could be between 17,000 and 17,500. That's actually is going to be as per the open interest analysis, right? Look at the green today. Lands again, once again doing good. TCS and Fyers done, but today CFC tunes also recovered, and overall all sectors except metal has done good. Let's see. Index heavyweights, HDFC is still not recovered, still remains momentum bearish, and price trying to take support at that support zone. HDFC also it's not really recovered. The momentum remains in the bearish zones. But look at Reliance is clearly a breakout of flag pattern. Momentum is clearly on the bullish zones and volumes are also good, and trend is also ADX indicator showing it's a rising trend, and then that's doing really well. Infuse close green but trying to recover, but the momentum is still in the bearish zones. TCS also has fallen down the channel, and the momentum is still in the bearishness. Weakness can be seen in both the IT stocks. ICICI Bank had strong stems yesterday, but a range shift of momentum, which is very bullish sign, has also started to work out. But today it seems to be a red close, but no otherwise. Yeah, that's a resistance over where it is. So if that resistance is taken out, it could go further up. But otherwise, momentum is in the bullish zones actually for the ICICI Bank, right? Another stock, ICICI Bank and Reliance overall is in the bull zones in the heavyweights. Kodak Bank seems to be showing some green, but it is at a major support zone and consolidating there. That support zone it has touched at least for at least 5-10 times previously. If you look at the charts, right? That's it. It's unlikely to give up that zone, anytime, right? So probably it may be consolidating here for long, not until all the market recovers fully. That's Kodak Bank. And so overall, two sectors doing good, ICICI and Reliance. Others, ICICI didn't do well today, but overall the momentum is good for those two. And otherwise, still none of the banks are doing that great. IT is doing bad. Sector performance, if you see, it was kind of an update. You can see IT recovered 1.1%. Metal was kind of flat down. The only sector that was down was metal, 0.30. Auto did well, 2.2 up. Pharma did well, 1% up. FMCG 1% up, 0.5% up. Reality, but all are sideways momentum. None of them are bullish. Only metal has got medium-term bullishness, but today it was a flat day. Flat downward, you can say, and side. So overall side is momentum for all in short term. So stay away from picking up the top sector-wise selection of the stocks for the positional trades. Institutional participation, if you see, you have another 3,000 crores selling in the cash that happened today, and look at that down figures. 6,000 crores, 6,000 crores, 2,000 crores, 3,000. So it's heavy selling that continues, without any stop, non-stop from the last April 2021. That's what you see. Institutions are not stopping selling. Today also same thing happened, but domestic institutions has been trying to match up and buy good amount the last 3-4 days, but that doesn't help too much, looks like. So institution selling concern continues. Some kind of intervention might have happened, some resistance is seen, and it is still above 76 levels. US dollar is resisting the momentum, so that's the level. It will be hovering between 75 and 76 or 77. That's what is happening. US dollar has also shown some resistance and some cool of red, you can see that, but it's still in the momentum bullish zone, so it's very likely that it can dollar index can shoot up to 103, the next resistance zone for sure, right? But it's a small pause before a stop. Global indices, if you see, Dow Jones has shown some green, right? Or Nasdaq on them also showing green, and S&P 500 also showing a green, but momentum for all that, remember that it is still sideways. It is not crossed into the bullish zones, and it is very close by a support zone. It is not breached, so Basically, it is having a small retracement of a big bounce up that happened in all the US markets. That's the story. So we'll keep a close watch for the pre-market tomorrow. What happened the previous night, right? Oil crude has had cooled off a little bit, but again, it's once above 100. Today is also a high level, which is more than 103 or something. It's not good. Yeah, momentum is rising, but it's in the sideways zone. Some cool off is there, but it has to come below the 100 at least for to benefit the markets. Gold had cooled off a little bit last 2 days. It had shot up in the bullish zones earlier, but had a big fall off yesterday. And seems like gold is trying to hard to go to the all-time high once again. So probably it may fall back to the support zone once again. Slow momentum and sideways. A failed attempt to break out actually. That's what happened in the gold. Another failed attempt, you can say, halfway. Actionables to Reliance Industries breaking out clearly, two mega bullish candles, and then now we have a resistance. You have to be cautious. Wait for a small pullback to come to get to gain some points in the swing trades. Momentum is bullish, volumes are high. Trend is ADX is rising up. UPL is second stock. This is not ready to take trades, but the momentum is bullish, and there is a major resistance zone. So the moment you see that the close is happening above this resistance zone, that's the time to take a small swing trade, right? But otherwise, it's not at ready because it's at approaching a very close. You don't know whether it will hit that and then fall back down completely, or it will break out and go. You never know that, so you have to be cautious. But there is a good chance that it can move up because the momentum is good and trend is also bullish. So to wrap up, it's mild bearishness that I have, right? Basically, it's a neutral sideways view with a mild, bearish bias is what I have. And you know what? That is all based on not any assumptions. It's all based on the chart pattern, support levels, momentum indicators, trend indicators, Bollinger Bands, and all that we had seen on the previous sites. So your view could differ. The end concluding market view can be different, but that's my view, my own view. You can form your own, but the underlying things are the momentum, trend, and volatility, and price patterns, and support resistance levels. Right? That's what we had discussed during the last 7 minutes. So just to wrap up, we had 15-20% of recovery. It happened in 5 weeks. That's a good thing, but last 2 weeks and more, it's retracing now. So it's having a bearish bias. It's showing some consolidation in the Bollinger Bands, and it's below the median and Bollinger, and so clearly there is some bearish bias is there in that consolidation. That's what. And the war things is happening still, and Fyers are continuously in selling mode without any stop, and crude is also high level, dollar is rising up, and rupee is weakening. So 17,500 and 37,500 is the things that you have to look out for the indices, right? For at least to have some upward bias. And 18,350 and 39,400 would be the level where we can clearly be seeing that we are going back to the bullish days, right? Similarly, 16,400 downside and 34,000 SB. We have to be vigilantly watching that, because below that we may have a bearish, bearish ride that may be happening. So volatility can spike up. War, all these news of things are still happening there. Price are continuously selling, and you have an expiry on top of that. So volatility, very closer to the 20. It's not that low, so it can always spike up. So you have to be cautious. Stay away if it is spiking up to about 20 for the markets, and expiry day theta gaining trades can be attempted today, because eventually everything is going to get to zero by the end of the day, right? For the weekly expiry options, if you're trading in that. So that's a wrap up, right? So volatility is still there in the markets. We had seen that yesterday where we had more than 8 or 10 kind of small V-shaped moves, up and down, zigzag, and then big breakdown. So all this can happen when the volatility is high, right? And so you have to be cautious. So never take overnight positions. Always have hedge positions, and then intraday also with tight stop losses. Watching the candlestick patterns is what you have to trade in the price action, right? So that's my view of a sideways view with the bearish bias is what my view for tomorrow. So if that helps you to frame your own view in some way, consider hitting the share button. Share it to as much people. Subscribe if you're not, and leave comments, and then like if you find it useful. Right, we have very few subscriptions, and I appreciate your help in this. Thanks a lot. Happy trading, happy learning, happy investing. Bye.